Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for November the 25th to the 29th, 2019. So this week markets took a bit of a breather, no new highs this week, but the trend is still alive, and that is up. Buyers came in, defended where they needed to, and we'll get to the charts and see what that looks like in a few moments. But for the upcoming week, expect a slower week as there is U.S. Turkey Day on Thursday. So Thursday is the actual day off. And of course, usually we see a lot less participation on Friday as most people are still recovering from all that Thanksgiving dinner on Thursday. So, or on the Wednesday, excuse me. So, expect it to be a slower trading week in the latter half of the week. In the early part of the week, we do have a slower news week. Earnings season has certainly has dipped off now, so there aren't as many names reporting. But just again, make sure you're not trading any earnings names if you're taking stuff overnight. But as for the econ calendar, we do have existing home sales on Tuesday, always interesting to watch, and on Wednesday we do have the heaviest news flow day in terms of econ news that day. We do have the GDP number coming in on Wednesday because Thursday's off, of course. There is the oil number and jobless claims number, and so that's going to be the busy econ news day for the coming week. So with that being said, let's launch to the charts now and talk about the week that was, and of course let's preview the upcoming week. So this week, no fireworks in the equities market. You know, the trend continues to be up, and that means we're just grinding higher on the indices and grinding lower on the VIX product. The real fireworks this week was in Bitcoin and the crypto markets. We finally got that move that we had been looking for the past several weeks. So let's talk about equities first, and then we'll get to the fireworks on the crypto side. So look at VIX. So, you know, let's take a big step back here. VIX continues to go to basically yearly lows, right? So this is a monthly chart. Big red, you know, not big red month, but red month below last month's red month. So the VIX product VXX is basically, you know, decaying, and eventually will reverse split, just a matter of time, trading at 1728 at the close on Friday. So down month so far for the month of November. We got one final trading week left in the month of November. Probably going to remain a red month. I'm going to go out there on a limb with only really 3 real trading days next week. Friday being kind of a more quiet day usually. Probably going to see a red month by the end of Friday. So this week here, not that much movement. So very, very tight range. But we did end up with a negative 0.69 week. So very small negative week, but nonetheless closed near the bottoms. Not unlike 2 weeks ago, right? So look at that doji there, very similar to what we had this week. So even though it was a very tight rangey week, you know, they're still closing it near the lows, and that kind of shows you the sellers are still in strength, are still in control, because they managed to close it at the bottom end of that range. So next week, if the sellers get back in there again and there's no, you know, new risks out there, expect more VIX selling, because the volatility is definitely leaving the markets as you see here. So basically, you know, just all we really need to do is look at this chart on the daily chart, because it was a very tight week on the VIX. You recall the last weekend's video, I said, okay, on this coming week, what you want to watch for is this, because we have an outside bar and down condition right there, right? So you want to see what's the next bar? Is there a continuation or is there a reversal? Not to forget, there was a gap right there. We pointed that out. That gap right there was, you know, I'll just turn it green for a second so you can see that. That gap there, you know, there was a chance it was going to get filled, and it got filled on Wednesday. So here's how to, you know, just understand the price action. If this is the first time you're joining us, or if you just need a bit of a refresher, here's how it works, right? Outside bar down, this bar here is down again, so continuation. This is a momentum move because it starts off with this outside bar. This outside bar is significant because it stops out both sides. Anyone who's trailing and trading in tight ranges here, if you put your stops at either side of that bar, you probably got triggered on this bar. You know, went up higher, so anyone who was short got stopped out, then went down. That means anyone who put their stops down here also got triggered. And so the next bar is important. That next bar is down, and that means if you need to get in the trade now, you need to basically leg in and get the chase price down. So momentum to the downside, not to mention this is a gap, so it's a real chase down. Okay, so gaps down, outside bar down, down. This is your Monday. Here's on Tuesday. This is significant because right there, it gaps down. You don't see it that much on this chart because it's the VIX chart's very tight. On the SPY, it's more obvious. We'll get to that in a few moments. it's a gap down on the VIX, and they actually bought it back right away. So it was a small gap down the VIX, bigger gap on the SPY. They bought it back, creating a reversal. So the Scott Redler from the T3 group popularized that reversal. He calls it the red dog reversal. That's a red dog reversal right there. I'll show it to you again on the SPY because it's more apparent. Then does the opposite of what it did here. Outside bar up now. As I've been saying for the past several weeks now, the 8-period moving average, it's basically trending off that trend line, off that moving average. So every time it taps it, right, on the VIX especially, they have not had a close above the 8-period since way back here, right? So October the 8th, that's the last time we had a close. Actually, that's not true. We have a close right there, the 9th, right? So it popped up, it stayed 2 days above the 8-period, and then it closed below the 8-period here on the 10th. Okay, so here's the last time we were at above the 8-period. Then it is your classic, if you're a classic moving average kind of guy, you're waiting for that crossover. It does the crossover, and since then, look, you can just see that the trend lines or the moving averages are spreading apart. That means it's trending even further, and the sellers are basically selling every touch of that 8 EMEA, and they did it again on this past week, right? So it goes outside bar up, hits that 8-period, once again cannot close above it, but guess what? There's your gap, right? This is why you want to watch gaps and mark them on your charts and carry them forward, because this here turns into the perfect place to get to basically cover your shorts, your longs, if you're long VIX or short the SPYs. We'll show the SPY in a few moments again, and you'll see the exact opposite. It goes outside bar up. You could have bought that there. Outside bar up, cover the gap fill there, and then it goes outside bar up. Once that low gets taken out, there's your move back down again, taking out that pivot, and did they have enough strength here? Low 1722. It closed here at 1726, so not quite low enough. Although in the after hours on Friday afternoon, it was trading as low as 1702. So anyone who did have their stops below here, if they're taking their stops after hours, and they would have got stopped out. So we'll see what happens on Monday. We'll see where it opens up. But once again, the thing to just keep paying attention to is, can the VIX continue to stay below the 8-period moving average? Right? We have not seen that violated yet. We did see some of that action on the indices, but the VIX to date, again, since the 8th of the 9th of November, October. That's over a month and 2 weeks has traded below that 8-period, right? Not one single close above there, so significant there. Okay, so what is it going to take for the markets to close above the 8-period, and then you want to see that break above that closing bar? For now, the trend is down, right? What else can you say? The trend is down. Don't need to belabor that point. The trend is down, down, down. Only 1 month left in the year, and the ball is in the court of the bulls. Let's talk about SPY now. Monthly chart. Okay, there's your momentum bar, outside bar, and up. Okay, so I want to delete some of these lines now, as they are no longer significant, to clear up some space. Outside bar and up on the monthly chart. So going into December, so we only have 1 week left in November, as I said, of the VIX product. I'm pretty sure it's going to be a green month for November. Pretty sure. Up 2.5%. Something really uncertain or very shocking and surprising could come out in the next week and turn this into a red month. That's entirely possible. But if it closes like this, then next month it's hard for the sellers to come back in and kind of turn things around, because we only have 1 month left in the year, and the momentum now is in the favor of the bulls. All right, so we're going to need to have something quite surprising come out to change the current market narrative, because that's what's currently driving the market, is that there's an underlying narrative that people have bought into, and that means there has to be something substantial to change that opinion. Otherwise, we're going to continue to get this movement that we're seeing right now to the upside. Maybe the new decade changes the story, right? Maybe the new decade creates a new narrative, but right now, in terms of what we're trading in, the environment we're trading right now, the narrative is intact, right? So that you can make up whatever narrative you want, but the fact is, we're close to all-time highs. There is no, the trade war is where it is, and it's not escalating. There are some geopolitical risks out there, but it's not escalating, and it seems to be the perfect kind of Goldilocks environment right now for the markets to basically go higher. People are chasing yield, they're chasing returns with the negative interest rates and low interest rates that are out there, and equities are a very good, very attractive place to be. So outside month and up, weekly small red week, right? So this is what I meant by a pause for the indices. We have a small negative week for the SPY here. First red week for 1, 2, 3, 4, 5, 6 consecutive weeks, right? So we did have a higher high here. It is getting a little, it is getting up here now, and I'm still expecting this trend line to eventually get tested. Maybe it happens this coming week, we'll see. And you'd want to watch for that when it breaks below this week's low. So if you can break below this week's low, I'm going to change that to purple to signify the weekly timeline. If you can break below the weekly low here, that puts the potential here to come back in here and fill some of the gaps that we'll see on the daily chart. Okay, so there's your up week, but did turn red. It did stay red, excuse me. So for the 2-day chart, well, let's mark it up first on the daily chart. So let's give it 1 second here. So on the 2-day chart, basically the move that we had this week is a continuation of the breakout we had 2 weeks ago. So back here, I'm going to move some of these around here so I can see the dates. So back on November the 8th, we had the 2-day inside bar, so outside inside, which broke to the upside. And this is a continuation, right? So we just had 2, 4, 6. Remember, these are 2-day bars. 6 consecutive days of green right there on the 2-day bars. Then this week we had a higher high, then it broke below the weekly open, then it broke down, and now there's our low for the week, and then went inside bar for the final 2 days of the trading week. Very tight stuff at the end of the trading week, not much going on. So that was a continuation on the 2-day chart. On the daily chart, this is what how it really played out here. So if you recall, on Tuesday we had that gap up. On the VIX we said the gap down, and then we had that reversal, right? So here it gaps up here, correct, and then it comes down. Once it goes through here, there's a reversal. Opens up there, and it becomes a reversal. Essentially, this is a up move, and the next day is a down move. Now, if you lump these two together, right, that would actually create an outside bar, right? So you put these two together, this would, that would be outside the range of this, and basically what this means is that the seller simply ran out of time. Otherwise it could have been an outside bar. So these two together, put them together, creates an outside bar, and that's what that creates there. So basically, it goes up, comes down, and it gap fills that area there. We talked about last time. There's your gap, and if gap filled it, then it went inside bar, and then on Friday it cracked up there a little bit above, but it couldn't do much. So this is what usually happens here when you have these mixed time frames. So anytime the market opens up high and falls back into the range again, and you have another time frame below it that's supporting it, you have this type of choppy environment, right? So here is your weekly open, purple. There's your monthly, quarterly open down here, and now you have this kind of pinball action. The sellers could not break it down any further because there's your 8 period. So that's your blue line there. There's your 8 period moving average that we saw on the VIX. Buyers supported here on Thursday. They actually closed below the 8 period. So there we had a close right on it, and then on Friday they defended it once again. So they did not allow sellers to break below that inside day. That could have changed things a bit. That could have changed things and would have made the next pivot. If you're moving average guy, they'd be aiming for that. They'd be aiming for that 20 period. That's what they that's the way that moving average traders think. They'd be going for that area there. Okay, so that's what you want to be looking for here is on Monday. If this happens, if it breaks below this low here, they're going to go after that pivot. If they're strong enough, they're going to go after that pivot. And then if it goes further down, they're going to try to touch that 20 period. That's what everyone's waiting to see whether or not it gets tested or not. And if it does get tested, does it hold or not? So below that, we have a gap way down here. Okay, so I'll just mark it in my charts here because that's the next one that's in proximity. There's the unfilled gap right there. 204.13. This gap here got closed. That's why it's not drawn. Close of 306.14. That was 306.06. See how tight that is? So that's the way the gaps get filled. So that's the next gap below the monthly. Okay, so that's what you want to watch for if you want to see how that breaks down. Okay, so you got the reversal there on Tuesday, breaks down, and then they basically support it at the 8 period. Now on the 4 hour, this is what it looks like. So let's just do a little bit of price action analysis on the 4 hour chart. And the 4 hour chart, as I talk about all the time, is very useful because it gets you out of it keeps it out of a lot of trouble. Sometimes in trading, it's less about what you do and what you don't do. Okay, so here on the 4 hour chart, this is what we saw. So here's your Monday. Okay, so gaps. Monday is your outside bar, momentum up, right? Momentum up. So here is your gap up. There's your Tuesday. It gaps up, it comes back down, right? Triggering a bunch of stops. There, people get short, right? That's your reversal right there. As soon as it breaks into here, you get short, your stop's up there. Very tight stop, very nice trade, because then you have all this potential. If you're not that fast, yeah, look, you have another 4 hours right here. Outside bar, inside bar, and then it goes outside bar, inside bar, down. Okay? There's, you know, your 20 period moving average on the 4-hour chart. So that's the 4-hour chart here. It goes inside bar, down. Look, as soon as it hits that, they defend it, creating an inside bar. It means that this, all the sellers had was this move here. That's all they could do. That's all they could muster. Okay? And then they went inside bar, so any selling that had happened there, the buyers had countered that, creating an inside condition, and then they went inside bar up. Inside bar, outside bar, inside. So now that we want to see, we would definitely want to see how this resolves on Monday. What's this outside inside? How does it resolve this coming Monday? Okay? So when I talked about what you don't want to do, it means if you're trading inside if you're trading inside a previous range, you want to know that, right? So people get chopped up a lot and oftentimes overtrade the indices because they expect big moves. And most of the times, the big moves are not going to happen when you're trading inside a previous range, because by default, that's what an inside bar is. You're currently consolidating. So as this example here, once it breaks above this inside bar and it pops up, if you fall back into the range again, you're range trading. This here, look how tight that is. This day here, it popped above, this is your Thursday, it popped above the prior 4-hour high. As soon as it comes back in, it's range trading. And then this gets even tighter. So on Thursday afternoon, if you're trading indices, you have to, you know, this is this is the environment you have to navigate, an inside condition. So it doesn't mean you don't trade, but it means well, you can elect not to trade off, of course, or you can look for greener pastures if you're looking for range, or you have to adapt your trading. You're not going to look for breakouts, because breakouts will fail in this type of environment. You're not looking for large range because it won't work in this environment. Likewise with this. See, on Friday, I elected to take a long extended lunch here because once I saw this bar and how much time we had left in the day, what's the chance that we're going to go outside bar and up on Friday? And you know, once you see enough market environments and you see the volatility and the pace at which things are trading, you can make that assertion, or you can make an assumption, and you can make an educated guess on whether or not you think it's going to be a breakout day or not for the indices on a Friday afternoon. And for me, the chances of getting outside this range, considering how slow the market was moving, it wasn't going to happen. So if it was just going to be a grind, and especially since we're still inside of this range. Note how the entire Wednesday, Thursday, Friday, you're inside of this range here. So that's Wednesday's AM session. So we had the big day on Wednesday. Big is relative, right? You're down 0.8%. So you had the largest range of the session on Wednesday, first in the AM session, AM part of that session, and then the rest of the week you're inside that. So how do you get outside of that? And that's what you want to always be asking is, especially if you're trading ranges. If you're looking for range expansion, you need to be constantly thinking, how are you going to get outside, prior ranges? Because anytime you're inside a prior range, it's gonna, you're gonna be trading mean reversion methods versus looking for range expansion methods. Okay, so that's important to understand the range or the environment you're trading in, so that you have the right context for your trading strategies. Okay, so that's that's why the 4-hour for me is very, very important. So there's your SPY chart. Okay, so let's speed up now with the Qs. So on the Qs, same kind of conditions we see on the SPY. Outside month up, still a green month, up 2.4%, not unlike the SPY. Another red week here for the Qs. So we have, just like the SPYs here, we had a red week, 1, 2, 3, 4, 5, 6. Before that, 7 consecutive green weeks. But still, we had a higher high there, but it did close the week minus 5.3% down for the week. On the 2-day chart, it looks like so. So we have this situation here. Let's give it a second for the lines to catch up. There we go. Outside inside, just like on SPY, it had popped up. It was a continuation move. Outside up, once it broke below there, right, then that it's going to come down and potentially test this low here now. So on the daily chart, very, very similar trading action there. So there's your reversal on Tuesday, right? So it goes outside bar and up, right? So there it comes in. As soon as it comes out the other side, expect that low to get taken out. We had a gap right there that got filled, and then it goes inside and then outside bar on Friday. So that's significant now, because now you want to see on Monday what's the next bar? Now that we have an inside outside, what's the next bar? Is it inside bar up, down, or inside again? I would like to see the inside outside inside. That would make it quite interesting, because then you'd have even more consolidation, and then you expect to have a bigger move coming out of that. So if Monday ends up being a really, really tight day, we have another repeat of Thursday's session, then we have an inside outside inside condition, and then we definitely want to be seeing how that breaks on Tuesday. So prepare for one of those three eventualities, right? Inside outside and up, inside outside and down, or inside outside and inside again. Only three things can happen there. So on the 4-hour chart, this is how tight it was. It was very tight. And the 4-hour, we already have that inside outside inside. So we definitely want to be waiting to see. Sorry, it's not inside here. My mistake. It's just outside inside. We do definitely want to see how it resolves here on Monday. Outside inside, but once again, you have an outside bar on the daily chart, right? So this is something you need to navigate. Is you need to get outside of Friday's range. If you don't get outside of Friday's range, you're inside bar, right? So that's why it's trickier, because you need to clear the outside bar's range. Otherwise, you're gonna get stuck on as an inside condition, and if you don't adjust, it's going to be range bound trading, and then you're gonna get chopped up if you're looking for range. Okay. So there's your Qs. Russell basically told the story even better than the Dow and SPY. Sorry, Qs and SPY. What I mean by that is this. So right now, green month still. Okay, but here on the weekly chart, it was inside week. So that was the week it was, right? So very, very tight stuff on the equity side. Not a lot of fireworks there. Down 0.45%, but exactly inside of the prior week's range. So on the 2-day chart, it looks like so. Really tight stuff, right? So here's your week right there. Just wait for the lines to show up there. There we go. Here's our weekly open. All right, and really tight stuff there. So you don't want to be too aggressive in that kind of a environment, because you're going to get chopped up if you're looking for a range. 4-hour, tight stuff, right? Inside, outside, inside, outside, inside. Right? This chops people up. So this is why you need to understand that. You need to have an understanding of range, and whether you're trading inside another range or whether you're trading outside of a prior range. Because if your strategy is momentum, or you're looking for some movement, that means you have to understand what conditions, where those conditions work best, like what conditions best support that type of method. So that's why most people end up losing money, because they're using strategies that are either momentum based or that try to capture range, and they don't have a proper understanding of discerning what a range bound versus a range or a contraction versus a expansion environment looks like. So that's your inside week there for SPY, Russell. It looks like that. A hint is this, right? This is the hint. Look at the contraction on the Bollinger Bands. See, on the prior week, last week, it actually started early. So look, it started actually here last week. So here's last Friday, not this past Friday, but last Friday, Thursday. So last Thursday, we've seen immediately a contraction of the Bollinger Bands. Because here, if you just look back a bit, it already started contracting, right? Like on the weekly chart, we already know what happened. This week prior was very tight as well, and it was getting tighter and tighter. So on the 4-hour chart, it starts to tighten up, and it gets very obvious coming into this week, because now you're inside this Bollinger Band condition. Okay, so when you hit the top of that Bollinger Band, if it's when it looks like this, if it cannot keep going, it will retest the other side of the band. It will test the other side of the band. Happens here. Okay, now it's on this side of the band. Expect to go back to the other side of the band if it continues to be in this condition. This could all change, of course. Like on Monday, if you have a huge gap up or gap down, that will of course open up the bands. The bands are not forward predicting. That is not a predictor of price by any means. It's simply allowing you to visualize historical data. Okay, so why this is significant, because it just tells you that here, the bands here, it shows you that people have likely have their it's a way of showing support and resistance, because it shows you where price had previously been, right? So that's where price had previously been based upon standard deviations, and this is where where likely you're going to find layers of support and resistance. Okay, so right now people are buying that band at the bottom and expect it to come to the top. Again, Monday things could change if there's gap up or gap down, but for now you expect it to retest the other side of the band if nothing new comes out on Monday and there's no big gap either way. Okay, so outside inside on the 4-hour chart, let's see how that resolves. Let's go on to the Dow now. Okay, so Dow, same kind of condition as the Qs and the SPYs, outside month and up. Okay, momentum there. Now on the weekly chart, red week as well, smaller range. We did create a higher high there, but it closed back into the range again. Okay, so perhaps testing this long trend line that we've drawn a while back now. So on the Dow chart, so on the daily, same thing as the rest of the indices. That's why we can speed up a bit here. There's a reversal bar on Tuesday, right? So there's our inside bar. Sorry, not inside, but our reversal bar. Just like I said on the SPYs and Qs chart, if you had more time, it would have turned to an outside bar, and that's what we had on the Dow, right? So in the Dow here, they were able to to show it in one single session. Well, you see it in one single session, right? Where the other indices on the SPYs and Qs, it took 2 days to see that outside bar. It became a kind of a compounded bar, but here you see it. Tuesday opens here, closes below the prior bar's range, creating the outside bar. Okay, so this coming week you have an inside bar up condition on Friday. Now if it breaks below here now, it's an inside bar reversal, right? And you want to see whether or not they can break below a prior low, especially the weekly's low right there. I don't want to make that one green. Let's turn that back purple just to visualize that. So there. On the daily chart, it's inside bar and up here. If it breaks below that low, they're gonna go after that pivot there and that pivot there. They go after that pivot there. That will turn the week. That will basically break the prior week's low. And then you can expect a deeper pullback. This one here, it did test the 8 period, right? So there's your 8 period. It did close below for 2 sessions in a row. Then we had an inside bar pop. Now they did not close below the prior bar's low though, right? So they could not break below or close below. So that's what you're waiting for in order for that EMEA to break definitively, right? So that's what you're waiting for. But now if all of a sudden it shoots back up again, which looks like it might, because here outside bar down, inside bar, right? There's your contraction, expansion again. Now they're looking to take out that pivot high, which it did already. They took out that pivot high. The high here was 278.90. There's your high of 279.03. Now they're going after that pivot high. So if the buyers all of a sudden have some strength on Monday, they're going to come back up here and take out that pivot high, and then you're back at all-time highs again. So you're really not far again from those all-time highs. And the 4-hour chart, that's basically what we saw here. Outside, inside, down, inside bar reversal right here. Right there, inside bar up, right? Inside bar and a little bit of strength there, takes out that pivot high. So unlike the SPYs and the Qs, this thing did clear this mother bar's range, but still was very tight because then it fell back in again because the rest of the indices weren't doing anything either, right? And fairly slow news flow week. So there's your Dow. That's what you want to be looking for now, is that possible condition. Okay, so let's talk about TSX now, because the Canadian equities market getting tight again. Not unlike the U.S. counterpart, we still have a green month here, up 2.86%, good green month. We did have a red week though, right? So let's draw on that low. You want to see if you're gonna have a reversal, you're gonna need to first break below the monthly low, the weekly low. The next thing it has to make it a really big reversal, you have to break below the monthly low. With 1 month left, with 1 week left, the chances of breaking below the monthly low right now with only 1 week left is very slim. This is why it's gonna be very hard to make this thing a negative month, because the open is way down, is way here, right? So that's your monthly open. See on the TSX how strong that month is? Literally, it opened here and it's been green from the moment the month opened up. They bought it, right? Because that's the open right there, right near the low. The open and the low are nearly the same. And so the buyers have been in control the whole month right now, and it would take a lot for the sellers to take it all the way back down again and then to take it below the open and the low. It's a lot of work. So right now momentum certainly on the bull side. So 2-day chart, that's what we're looking for here. Outside bar and down. So if they continue to do the outside bar down action, it will turn the week red. It will break below the prior week's low, probably make it a red week. So watch for that, see how it plays out. And on the TSX, that's basically here on the daily chart. Just continue to watch this momentum condition. Outside bar, down, down. Okay, so if you break below this low that we had on Friday, that will take the prior week's break below the prior week's lows. But if all of a sudden you break above one of these highs, then it's going to be an extinguishing of that momentum to the downside. You'll probably come back up again and retest these all-time highs because they're very close once again. Okay, so that's that for the TSX. Emerging markets, everyone's watching EM and other proxies because it's a good way to see, what's this, what are the political, I guess the political uncertainties that are playing out in Hong Kong and Asia. What's that look like on the charts, and the EM's kind of showing you that. So we had a decent start to EM for the month, but now it has turned red, right? So now we have a red month for EM and creating a bit of a shooting star here. So this going into December is something to watch because we're not going to draw the line yet, but you expect this low to get taken out if there's going to be a big reversal. However, the quarter's down here, so it's going to be a hard time to turn the quarter red with only 1 month left, and then the things tend to slow down near Christmas. So likely here, look at the 3-month chart. It's kind of been tight trading here now for EM for the last several quarters. Okay, let's look at the yearly chart here. It's really, yeah. So you see when it's tight like that, you get that inside year condition. So probably, I'm gonna put myself out there. It's probably gonna be an inside year, right? So, so let's just fix some of these adjustments there. Okay, so that's that for EM. On the week, it's a red week, but inside week. So very tight stuff. Currently straddling the monthly open, right? So just enough now. We've managed to close below the that monthly open on the weekly chart there. So you have below it there. That gives us the red month. Okay, so inside week, you definitely want to watch and see how it breaks this inside week condition. Okay, so right here on the daily chart, all we need to do, so same thing as the indices, right? We had the inside bar, we had the reversal right here on Tuesday, right? Gaps up, had a really nice gap up on Tuesday, and then they sold it, right? It comes back in that range and went out the other side. Okay, now there's your low for the prior week. So on Monday, if they break below that low here, Friday's low, they're going after that low, and that will turn the week, that will break below the prior week's lows. So you definitely want to be watching for that, because then that will break the inside week, and that will be significant. Otherwise, if it can somehow do a stair step up right here, here's your 2-day. If it breaks above that high here on the 2-day chart, immediately they're going to go after that pivot. That pivot then will then lead us to go after that pivot. That will then trigger the inside week to the upside. Okay, so that's going to be the two different scenarios there to watch out for. Now for TLT and gold, those are the next two that we'll look at. Now we had a risk back off environment because people started buying or getting back into TLT. If you recall what I talked about last week, let's just start here first. It was inside month and down, okay, on the monthly chart, but they bought it back. Okay, so they bought it back here. See, they broke below the prior week month's range, but they bought it back, and here, this is what that looks like. Outside bar and down. We had the inside bar last week, and that was the question was, how do they break that inside week to the upside or the downside? And they took it up on Monday. So quite the similar situation we have on EM here, but the opposite. So here, right there. So this purple line here is the prior week's high. Okay, so that's the prior week's high. Here, this is Friday's close, last Friday's close. On Monday, it opens up right there, right? And it breaks above that high. As soon as it breaks above that high, it's going after that pivot high. That pivot high, don't forget, is the prior week's high. So once it breaks above there, there's your inside week right there, triggering to the upside. Okay, so it closes red though, but the job had been done. They had triggered the weekly upside break. Tuesday, Wednesday, small pullback on Thursday, small red day on Friday. But that's what the inside week break looks like and how it gets triggered. Once that high gets taken out, they're going after that high there, and that's how they triggered it. Okay. The issue though with TLT, however, is that let's go to the 2-day chart because it's more apparent. You're still trading below this monthly open. Okay, so the month is still red for TLT as we saw already, but they did recover from breaking below the previous month's low. But now you want to see how strong the buyers are. Can they break it above the monthly open? So right now inside bar for the 2-day chart, can they break above the monthly open, or do we fall back into the range again? and come back through this. So that's what you want to watch out for, because now I'll blow up this line. We don't need that anymore. Oh, excuse me. Okay, so we'll delete this prior line here, because there's your weekly low now. Okay, so if for some reason it comes back down, it goes inside bar back down here, takes that pivot low, there's a chance we break back inside the range again and come back out the other side. All right, so that's the counterpoint there on the weekly chart, because if it takes out that low on the weekly, that turns into an inside buy reversal on the weekly chart. Okay, and you still have that blue line. There's your quarterly open, and there's your weekly, their monthly open, right? So you're still trading with full time frame alignment, depending how you open on Monday, because you're still trading below the quarterly and monthly open. If you start trading below the weekly open, then you're trading below the week, the month, and the quarter, and that will be full time alignment back to the downside again, especially if you break below that low. So if there's no risks, if everything, it seems to be clear on the uncertainty front, they may end up selling bonds again, and then you break below that low, it comes back down to the other side. Okay, because if the one way to think about it is this, right? So they did break below the monthly low. Okay, so that was the monthly low right there, that orange line. So I'll just show this. Right there, that's the monthly low. Okay, so that was the prior month's low. They broke below there to create the inside month and down condition. On the week, however, they buy it back, right? So here, break down, pops up. This, however, could just be a pullback, right? Because you had the break already, consolidation, breaks up, however, it breaks back below this week's low, the work is still possible to come down here. Okay, so that becomes a continuation of that break to the downside on the monthly chart. So time will tell, but again, that's what you want to be watching for, is this low get taken out, then it's basically, we'll basically turn that month back to the red side again, back below the prior lows, prior week's month's low, and then we're moving more to the downside. Now, GLD, talking about the risk on, risk off environment. What did GLD do? Not much this week. It did leave the week red, so red month so far. It is, still momentum to the upside here, though, on the quarterly chart. Outside a quarter up and inside now, so buyers have met their match with the sellers here for the past quarter, consolidating here, probably going to end inside quarter for the rest of the year. On the week, though, we did have a lower low, so the buyers could not step up, and they are now trading below the quarterly open, below the monthly open, red week. Okay, small loss, minus 3.929%. Okay, for GLD, just look here, momentum to the downside. Okay, so there, outside, but then it goes outside, down. So just continue to watch and see now if the momentum continues, because you're trading below the monthly, below the quarterly now. Can they pop it back up? If they do pop it up, though, you still got the monthly there, right? So it's going to be choppy because you're between the quarterly and the monthly. So you're going to have, it can certainly pop up here, but once again, you're going to have that mixed time frame environment, and that is not always conducive to range. So understand that. So I'm just going to draw in the lows here. I'm going to delete some of these lines. We don't need those. But again, if they break above that high, I'm going to turn that one purple once again, and just mark off the highs and lows of the prior week, because that's what we want to be waiting for and watching to see if they can break or not. Okay. Okay, so let's talk about digital gold now, because unlike these tight ranges we saw with gold bonds and the indices, Bitcoin finally got that move that we've been waiting for, and fortunately, I was correctly positioned. As you've been watching these videos, I've been short Bitcoin for a while now. Been calling that short ever since the quarterly charts broke. I've been saying, okay, the move is to the downside. The move is to the downside. Sometimes it takes people a long time to see the move, but the markets finally continued finally got the continuation I was looking for, and we got that inside quarter and down move, and the continuation finally happened this past week. Well, it's been going for a while now. We finally got the big moves that is typical of Bitcoin. So if you recall, once we broke below, that 3-month chart, the prior 3-month low, last quarter's low, I gave the red flag for Bitcoin. Said there's a very good chance now that we break below that, and if the sellers really step up, we can actually come down here to 4,124. That's a possibility still, because the sellers are still in control and the market's trending down. This is like the mirror opposite of the SPY, where the 8-period moving average it's actually trending off of that to the downside. So kind of like the VIX chart. So here's the situation, right? So there's your quarterly chart. On your monthly, inside month and down, right? I don't know how people are reading their charts and they think the trend is up, but anytime you see lower lows every month, excuse me, and you don't have higher highs, by definition you're in a downtrend. So yeah, I struggle to see how people are perma bulls, especially when you start to see lower highs and lower lows. You don't have to be a really good technician or market technician to figure out the trend. So what really got us going here was this pattern here, outside inside. Once it broke to the downside, that was it. That's all she wrote. That was my opportunity to actually add to my short, because I had been short up here 91.85.1 in that area there. We finally got that nice move this week of minus 15% on Bitcoin, even bigger moves in some of these alts, which are even nicer. I think what confused most people was this situation here, all right? Because this is the Chinese news, and it created the outside bar. Because prior to that, this red line is the prior quarter's lows. This is, most people were expecting things to break down further once it broke below that red line. But quickly, we had that Chinese news where, there was news that China was interested in blockchain and Bitcoin, and it caused this big, strength to pop into the markets. It was a plus 20-30% move for Bitcoin in a matter of 1 week. And so it created this inside-outside bar condition, which caused a lot of shorts to have to cover, myself included. I was short in the sequence, expecting more, and I had to cover. And then this confuses most people, because then they don't know which way they should go. They don't know if it should go up, it should go down. And this is something, frankly, you need to wait. Because at this point here, if you start trading inside bar, anything can happen. But this was nice, because you know that if it doesn't break outside of this range, it's probably going to be inside week the next week. Okay, so if we don't break outside this week's range, you're probably going to inside week, and that means things are tightening. Inside, outside, inside, right? We talked about that pattern earlier in the video. One of my favorites, because here, once this low gets taken out, it's coming down here. You don't know that, but you have a good understanding of price action, that there's a reason why it's probably going to take this out here, because there's going to be stops there. It's a search for liquidity. But most people don't understand that outside bars are broadening formations. And what I mean by that, this. So here's the 2-day chart. Okay, this sequence, that's the move that I talked about on the weekly chart. 2 days where you had close to 25-30% upside. It creates this higher high, and you have a lower low here. So most people get really confused, because you have lower lows and then you have higher highs, so they don't know the direction of the market. But the understanding is this: that is a broadening formation. By default, this outside week creates a broadening formation, right? And literally look what you see here now. That low you had on Friday from this broadening formation pretty much catches that exact low, right? So if you know the trade that I took, I was short from 91.85.1. It got down to as low as 6,819. So right there, 91.85 was the first short. Actually, I got in a little earlier than the 91.85. Yeah, right here. 92.78 was one of them, I believe. Let's double check here. No, I think it was 91.85. Is that right? Yeah, 91.85 on the 2-day chart. Right there. Inside bar reversal, and then it triggers the rest. The rest of the story. So it's very obvious once it starts to work in your favor, because, like I said in the VIX chart, the 8-period moving average, once enough traders start to look at it, it becomes self-fulfilling, and the trend just becomes lower and lower. Because you can see there, once you get that crossover and the crossover sticks on the moving averages, then you have the moving average traders in there, and they're using that as their kind of beacon to get short or more short. So it touches the 8-period and it ends up being a trend following herding type of environment. And things can go a lot further than you think they can go, because once there's herding, people are not rational anymore, and they just hit the they just hit the ask or they hit the bid. And so you're always going to see lower lows. That's why things like support, you throw that out the window, right? There is no linear support, because they will break below the previous low, and then you'll have more momentum guys coming in looking for the last crumbs to try to catch even more downside. So here you broke easily below the prior pivot low here. That low there was 73.33.4. Easily broke below that, all right, and then they actually went down even lower, all the way down, as I said before, to 68.19.20. So ETH was very similar. I think I talked about that one being a good short opportunity as well, because we had the exact same pattern. I'm not going to belabor the point here now, but you get the idea. Outside, inside bar reversal to the downside here, inside bar up, breaks below there, coming out the other side, right? And there's your break below the weekly low. So that is the way that ETH played out. And now with ETH, you actually have more potential downside because on the, well, here's what's nice, because ETH did it already, right? So here it was inside bar up, inside bar, and I said this is the chance here to do an inside bar reversal on the on ETH, because if you take it below the quarter's low here, it will come out the other side and take out that pivot. The low here was 138.27. The low here 137.71. That's where I covered a bunch. Right there was the low of this candle. It can still go, right? So I can still go here and potentially go down to the next level here, 100. That's the potential there. But I was happy to cover this short here, a lot of it, at the bottom of this low, because that's a very, very high potential target. So I'm happy to take that off, a lot of it off there, and that's what I call a campaign trade, when you have a very good understanding of where it can end up, and you're happy to take off that position there and then reset again for the next trade. No need to rush back in now, in my case anyways, because I caught the meat of the move. It can still go down further, and I want to hold on to a position there, perhaps add to it again if it starts to move back down, but happy to have caught that campaign trade from, where was it, up here? Where's it up here now? Right there, the 183.47 area, all the way down to what we say again? 138.27. Okay, so that's it for the cryptos. The trend is still down, right? So people may try to pick the bottom here, whether you're talking, Bitcoin or Bitcoin Cash or Ethereum. The reality is that just like we saw the equities markets, that 8 period, in this case even the 5 period, is still acting as resistance. So you're still really far away, which is actually basically, if you believe in moving averages, if you use those types of methods, then this is actually quite oversold now, quote unquote, because you're far from the moving average. People got ahead of themselves. They got ahead of the sellers got really, really aggressive, so they're really far from the moving average. Do not be surprised to see this thing pop back up into the moving averages again. And that's kind of what we had last time here, right? On October, we were way below here, right? You had this kind of move way down here, and look how far you are from this moving averages. People take the opportunity to kind of come back into the range again, and that could easily happen this coming the next week or so. So there's your crypto update. Now let's just fast fire through a few charts now for the coming week and see what we can expect. So a few, I'll give you a handful of names here that look interesting. So here, CAT on the weekly chart. So CAT here, outside bar and down, trading above the quarterly monthly open. If they can break above, right, that weekly high, we can come back up to the range again. Okay, CAT, Halliburton, similar pattern, outside bar and down, close the week green, above quarterly and monthly open right there, pops back above there, we can go higher, because on the monthly chart it's already an inside bar reversal, so you can expect this high to get taken out at some point if the buyers continue to bid it up. Okay, so that high there of 22.75, that puts us up here. Okay, so that would not be a bad target to go after if you can find a lower time frame to trigger it. Deer, strength here as well. Deer's been doing pretty well. See there, outside week and down, breaks above there, momentum's extinguished to the downside. We're back above the quarterly open, and that could take us back above the monthly open. CSIQ, these solar names have been getting beat up really badly. Here, outside bar and down. It's outside bar, inside bar. See how that resolves. Trading full time from alignment to the downside. X, more bullish of a name. Inside, outside, and down. Break above that weekly high. It takes us full time from alignment to the upside. Okay. PS, interesting name here. Okay, tight stuff. At some point we're gonna break out of there. Okay, so outside, inside, and down. Possible inside bar reversal long now if we break above this week's high. So that's tight stuff. But there, right? Inside bar up, inside bar right now. Do we close inside bar for the month of December? That's what you need to watch out for, because it could do that. But then there could be something explosive in the month of December. GoDaddy, very tight stuff. So expecting this thing to resolve at some point very, very soon. Outside, inside here now. Definitely watching to see how this plays out. It'd be a nicer break to the upside, for the sole reason that you already have the quarterly and monthly open here. So that would be full time from alignment to the upside if you can break above this week's highs. Okay. One last one. Here's one that's looking a little shaky. ZYNE, 2 consecutive inside weeks. Okay, and it's full time from alignment to the downside. So ideally, I say ideally because it's you have more folks on your side if it breaks to the downside, because if you're looking at the monthly or weekly charts, they're already red. So if it breaks to the downside here, then every single chart, whatever time frame you're looking at, quarterly, monthly, weekly, daily, will look red, and that'll just make it a natural selling candidate. So ZYNE potentially the downside if it can break the downside. Okay, let's talk about the worst performing stocks on my watch list based upon a modified Sharpe ratio, and then we'll get to the best ones. Actually, I'll share with you two more charts that look interesting. BABA, 2 consecutive inside weeks, right? So this again, another interesting potential here. Break above that high, full time from alignment to the upside. NEO, okay, so this thing has come off the bottoms here. So above the weekly, above the quarterly, above the monthly. See how that breaks that double inside week. That could be explosive as well. Now, let's talk about the worst performing stocks here based upon a modified Sharpe. VIX, we showed that chart already. That continues to be trending to the downside. So can they break that trend to the downside? That's what you're waiting to see. Beyond Meat, still one of the worst charts on my list. Week after week, it's staying red. Another ugly week for Beyond, although it's inside week, I believe. Yeah, for Beyond this past week. So here, you need to watch out here as it breaks to the upside. It's been taking such a beating, it could pop up again. So watch out for that. Go back to the daily chart. Let's talk about here. Here was a nice breakdown. So Turtle Beach, it's been selling off for the past couple weeks, 3 weeks now. It hit and closed at the lows on just easing to the lows for the past year. It's yearly lows. Okay, now actually just do 2 final names on the worst list, the worst performing stocks list. Chesapeake, where is the lows on this company? And I think at this point here, I don't think it's even worth trading it, because it's only trading 59 cents. It's literally a penny stock now, but there is no end to the pain for this company. Chesapeake, there you can just see this thing is not finding a bottom, and the volume is actually increasing. Look at the volume here on Chesapeake. Outside week and down. There, it's probably going out of business, or probably going to get bought out. Pins now, surprisingly, Pins after the IPO, man, does this thing have a bottom? Look at the chart on Pins, right? So there's your IPO open right there. 2378, looking good. Look, it's far away from that now, and the daily chart, you can just look at the selling. It's all-time lows for Pins. Okay, so let's show a contrast now. So the best performing stocks on my watch list based upon a modified Sharpe ratio. ICPT. Okay, so pharmaceuticals, all the rage this week. We had a lot of pharmaceutical names pop up on fairly speculative news. So ICPT, the past, again, since the beginning of October, been on a tear. Has gone from 56 all the way to 89 roughly. Amgen, bigger pharmaceutical name, hitting those highs for the year. Could be close to these. I don't know if it's all-time highs. I think it is all-time highs. Yep, all-time highs. Amgen, really flying. Look at that on the outside week here. Outside week up, momentum. It's hard to hear. Outside bar down, broke above there, momentum to the upside. Okay, Amgen, another. Let's talk about another name here. Sale. So man, Sale really bounced back. Had a really rough, I guess first 2 quarters of the year. Created a nice broadening formation here, though. I don't know if you can see it or not, but you can just eyeball it right there. So there, higher highs and lower lows. Lows go like that. So here, just draw it in really quickly. That high there connects to that high there. Then we have that situation here now. Let's draw it in like that. So once it comes back to the range, you can expect it to come out the other side. Now it broke above the broadening range formation's high. Now it's come back in to test it, expect it possibly to go even higher. Okay. Now let's do 3 more names. So FTNT, Fortinet, okay, software company, really nice 3-week run. Okay, really blasting right into those yearly highs, I believe. Yeah, is it all-time highs? Yeah, all-time highs. Fortinet, good stuff there. And all off this inside bar break to the upside. Let's go back to the daily chart. IBB, I talked about these pharmaceutical names. So biotech names, yeah, this thing is rocking. So biotech names, pharmaceutical names have been rocking, and IBB now on a really nice, basically month-and-a-half tear, right, all the way down from the lows here of 97. When things look terrible for IBB, if you recall the October lows, and just basically shot up now on the weekly chart. Look at that, 1, 2, 3, 4, 5, 6, 7, 8 consecutive green weeks. 7 consecutive green weeks. Nice chart, IBB. And one final one, Morgan Stanley. So the financials holding in strong. Morgan Stanley closing to close to these yearly highs here now. So is that true? Yeah, very close to those yearly highs. And the weekly chart here, inside weekend up for Morgan Stanley. Delete this one here. And you know, the financial ETF XLF looks very strong as well, right behind Morgan Stanley in terms of its Sharpe ratio. Look at that, right? So right back up to those yearly highs, close to all-time highs, very, very close. Okay, so that's a wrap for this week's video. As always, hope you found it useful. If you liked the video, please give us a big thumbs up. Subscribe to the video if you like it a lot. That way you can get notified as soon as we publish it to YouTube. If you have any questions or comments, drop them in the YouTube comment section or on our blog site. And if you don't mind sharing this video with your friends and other traders that you know, that'll help us grow our community. As always, have a great trading week and happy trading. And for US traders, happy Thanksgiving.